Hi, this is Web Beagle from Keen on the Market. I'm here to talk to you today about the market webs and how they can be used to gain a better insight on commodities, stocks, futures, etc. Um, kind of a better insight than a lot of the pundits on TV or anyone who's speculating out there. For example, I want to use crude oil on the larger time frame for the year of 2015. Specifically, if I go here, this is a weekly bar chart, so every bar represents 1 week. And the value areas are up here. This is the value area for the year. Okay, so what we're looking at here, this was the value area for back in 2014. This is the value area for 2015. Down below, we can see a short signal came in. This was the beginning of October 2014. That short signal would have worked out absolutely beautifully as we came down, continued to come down until finally found support at this Venom line. This is the fourth Venom line on the year to the tick. If you notice, 42.41. It's exactly where we found support in crude oil. As it moves up, who knows? You watch CNBC and they're talking about it's going to 66, it's going to 71, et cetera, et cetera. Where does it actually go? Well, it stalls out when it hits this Venom line right here at 60.30, roughly. And why is that? Because that's going to act as a extreme resistance point as we try to move back up to the upside and through it. And here we are finding it resistance, and now we're even moving away from it. So this week we've been trading to the downside. As we head lower, we could very easily head back down to test this Venom line at 42.53, and I even have a target below at 13.28. Do I think crude can go to 13.28? I think that's a bit ambitious, but that would be the next support level down below. I think that crude probably can't get that low, at least not for very long anyway. So if we're going to stay and continue chopping this year, I would look for 42.52 as another target spot if I want to be short. And again, with the Venom lines here, I can use this as reference for where my stop would be. If I wanted to get short here, my stop would be around 63 or so, or a little above the high of the year, which was right here at 62-ish, 62.81. So if I had to stop at 63, I'm limiting my risk. I have a very nice reward with from 57 down to 42 is about 15 points, which is roughly $15,000 per contract in crude. So the market webs actually provide these kinds of targets analysis at a glance very easily without needing to draw trend lines, without needing to draw moving averages, and help you determine actual price targets. It's like a map for your stock or your futures or your underlying, anything that has volume. So if you're interested in the market webs, check out the link in the comments. You can get it for Thinkorswim only. It comes with 6 hours of mentoring video that I did live with people answering questions, how to set it up on your Thinkorswim, how to read it, how it works. It uses the wisdom of the crowd, I like to call it, where it actually tracks the amount of volume that trades at different price levels to determine the value areas and the support levels. So it works very, very nicely without getting muddled down in the tails and drawing trend lines off the high and the low, where those were actually trades that were done by individuals that actually got caught out. So not the best or smartest traders in the box buying on the highs or selling on the lows. This allows me to track more of what the crowd is thinking, what the overall market believes. So again, check it out. The link is in the comments to purchase. I hope you enjoy, and I wish you all great trading. This is Web Beagle from Key on the Market. Thanks.